Welcome back to the Max Your Dash podcast. Thank you for listening, liking, and sharing. We are the #1 personal finance podcast in the world.
Crazy.
My name is Steve. I am your host, joined by my co-host, Nate. Mark is back after a hiatus. Dude, the people were wondering where you went. There's a rumor going around that we fired you.
I was out taking job interviews at a bunch of different places, and unfortunately, no one wanted me, so I'm back.
Dude, Mark's LinkedIn is just crazy because they've been seeing him on the podcast. He's trying to go to other podcasts now. This is getting crazy. Dude, it has been a while, though, since you've been on. You kind of, miss it?
I wouldn't say that I, miss it, but
Oh, really?
I like doing them more consistently.
Yeah.
I don't like... I mean, it has probably been a month, hasn't it?
Yeah.
Yeah.
No, the last one you did was the last Fed meeting one when they froze interest rates.
Oh, my God. Yeah,
So it's been kind of a minute.
yeah, it's been a while.
But that's actually what we're talking about today, boys. Some stock market stuff, the economy. The Fed meeting was last week. So we got some news headlines to talk about. What's on the mind of investors, stuff like that. You know the drill with these episodes.
Yep.
We kind of like having fun with these, right?
Absolutely.
But before we jump into that, Max Your Dash moments, the best part of the episode. If you're new here, Max Your Dash moment is a time that you were feeling true joy, happiness, and fulfillment. We are full of these, especially in the summertime in upstate New York, right?
Yep.
Can I go first because I want to use this one before you guys?
Please do.
Football season is upon us.
Oh, yeah.
Yes.
I
Training camp.
love these camp headlines. It is such a Max Your Dash moment for me and my friends. And us too, talking about the camp drama is amazing.
It's
This
really
guy's doing
overblown.
that. It is. It's so funny though. Media has really. I would have loved back in the day if media was like this when obviously I was too young, but imagine Walter Payton getting followed around by Bleacher Report. What would have been being said? But I love it. Did you see that? I think we talked about this. The Aaron Rodgers talking about Sean Payton. Did you see that?
Yes.
Yeah, I don't think I ever watched... Did you send me the video to watch or anything like that?
No, I didn't. It was a Hard Knocks thing, though.
Oh,
I don't think
okay.
it was.
Okay. Yeah.
I've been seeing Hard Knocks clips too, and it looks good, even though Rodgers complained about it.
Yeah. Well, he complained about the whole thing in general?
Oh yeah, he said that it got forced on him. I'm like, dude, it was the biggest offseason
Right.
move. You're in New York. Obviously, the NFL is
Right.
going to want the Jets to be on Hard Knocks. What did you think? He's like, we don't want the attention on us. Like, dude, come on.
He's been drawing attention to himself for the last
100%.
4 years, 5
Right.
years.
Right.
Whatever.
So, but
I constantly get asked if I'm a Jets fan. Won't stop. I am not a Jets fan.
you're gonna watch all the games.
Whatever. If they're on TV, I just don't care. I think he's... Yeah, if they bring in Devontae Adams, yes, they're going to be really good. But
And Delvin Cook.
obviously, when you have that kind of talent surrounded by you, but it's like when Tom Brady went down to Tampa and put all these great players around him. They should have been good.
They're gonna be fun. I'm excited to watch
You guys
them.
think they're going to beat the Bills?
Beat them
in
or without
the
Devontae
conference?
Adams?
Without.
Without Devontae? No.
In just the AFC
no,
East.
no.
No, I don't think so.
No.
They're not. They haven't been together long enough, and I don't know if Rodgers has.
Yeah,
I don't know. But their defense is supposed to be the real deal.
yeah.
It is.
I think they're going to be good. That division's crazy. The Patriots might win 3 games.
Yeah, shout out Matt. Go Patriots.
He won't listen. We're good.
That division is wild. But that's mine. Max Your Dash. Football season is coming.
Yep. Got it. Check. I'll do mine next. You guys know I bought my hunting property, and
Still haven't seen it. Depressed.
yeah, you gotta come over. We did our first food plot last week. I literally have to drive over almost daily to check on it and just see it grow. And it's so
Wait, so this
amazing
is
for
to
me.
lure the deer?
It's food for the deer.
Okay,
Yeah.
dude.
Don't get people triggered. I know there's gonna be people out
is
there
that? I didn't know that was a
is that
thing.
cheating?
Oh,
But if we
okay.
need some soy or something like that, is that what you soybeans out there?
There's not soybeans in the pot.
We could go steal some soybeans off his property, though.
Don't they just eat hostas and stuff? They eat my mom's plants all the time.
Yeah. So anyway, got my first food. If you're me, that's a big deal.
Yeah, you do look happy about it.
I'm very happy about it. I love it. How about you, Mark?
Yeah, Mark, you got a
Been
lot.
traveling.
Yeah, I had a busy July. It's hard to pick one, so I'll just say that whole 10-day experience. Two golf invitationals and a trip to Colorado, starting from Wednesday the 12th of July, ending Saturday the 22nd of July. That was a stretch right there for
Mark's clients watching this, like,
Don't worry, we got systems, we got teams.
I had an out of office. I was tired for like 3 days after that whole thing ended, but it was really cool. Colorado's, I love their temperature, or their I guess whatever. It's just dry. It was.
Are
like
you a mountains guy? Like, does it give you like? Are you more of a beach guy?
More of a beach guy, because I'm not going to go hike the mountains. Like, give me a helicopter ride up there, or train, or something like that. But it was cool out there. Cool views.
but you like the views. You just don't want the work to get there.
I like the views, and then how dry it is. So like when it was 90 something degrees, like I wasn't sweating.
Wasn't that bad?
No, not at all.
Did you miss Enzo?
Yeah. Although I did get some decent sleep out there, but
Did you get to sleep in?
no. I literally physically couldn't. Like the 2-hour difference, I was still I was waking up at like 4:30 that local time there. So it would have been 6:30 here, but
Oh, okay.
it is what it is. But it was nice. Nice to get away for a little bit.
Nice.
Detach. I'm still recovering.
Mark getting away for a
I
little
think
bit.
if I was going to live in a state other than here, it would be Colorado.
Really?
I love Colorado.
Pretty cool. I wish I would have played golf there. That's the only thing that I messed up.
Noise.
Nice.
Let's get into it, Steve.
Make sure ask moments check. Yeah, absolutely. We were kind of flirting around with how we like to do these episodes, and we're trying to get them to more like really just like talking about the state of the market and the economy, because I think that people like listening to professionals who are in this like every day almost react to like stuff that's going on. You know what I mean? So we'll talk about what's been going on, like what happened in the Fed meeting and inflation numbers and all the important stuff. But you came up with a cool idea of like reacting to more of like, we don't put too much weight into news headlines, obviously, as investors. But I think like entertainment wise, and it could be valuable to hear like our thoughts on different stuff that's like happened.
I mean,
it's fun to talk about.
The everyday person will see like a headline like America's downgraded their credit rating or whatever and be freaking out about that. So we should use this platform to talk about that, so that
Absolutely. Use the maxyourdash platform to educate, but also entertain.
It's funny how that gets dropped, and I don't know if that like was scheduled to be released right when that was released, but immediately following a shock in GDP to the upside.
Oh, yeah.
It's like, did they just want to get some bad news out there right after
It's
some good
so
news,
weird.
just to make sure no one thinks anything's good's going on in the world?
Wait, what were the GDP numbers?
2.4% year over year. That's the first estimate.
Nice.
Which we should be. Last time they got the estimate wrong by almost a full percent. So
That's a big difference.
Q1 GDP first came out at 1%, and they revised it up to 1.8%, I think. So you never know. Hopefully we don't get that type of revision in the wrong direction, but
Are people still buying stuff?
people are still buying stuff. Yeah.
I also wanted to talk about consumer sentiment today, too.
It's high.
How's everyone feeling? Is it?
It is.
mm-hmm.
Where me see here. I thought it said something about.
I wanted to pull up maybe a good starting point, like we usually do. I'd like is where are we at year to date?
Oh, return wise? Yeah.
Do you have that handy, Martin?
Was that market returns?
Like year to date data?
Yeah.
JP Morgan.
I got it.
Weekly.
So we've got
Pull it up on the big screen.
S&P 500 year to date 20.47, coming off the back of a nice week last week, up 1% in the S&P.
Ooh.
Crazy.
Dow Jones, this was some kind of stuff hitting the media. Had like its longest positive streak, and I don't even know, it was like 14 or 13 positive days in a row.
Since 1987, I just read that this morning.
That was a long streak. It broke the streak, obviously, but only up 8.25, but it has been on a heater.
Mm-hmm.
And then you get into the NASDAQ kind of going crazy this year. It's up 37% year to date.
That is just nuts.
It's so crazy. Like, so for people listening, when we're building clients' financial plans, like saving for retirement, I feel like we always kind of have this target return average of like, if we could be doing 8% or better, that's going to be really good. And if you look at the indices right now, like literally everything is above 8. Every single like asset class almost, except for the bond side of things.
Yeah.
S&P up 20, Dow Jones up 8, Russell 2000 13, NASDAQ 37%. Like, it's just so crazy. And it's a good example of like at the start of this year, there was not a lot of optimism about investing out there, even within us as advisors, right? It felt like, geez, a recession is kind of inevitable. Has the market priced that in yet? We were all very concerned, and then here we are.
37%.
So it just kind of goes to show, like we always bring this up, but whatever you're feeling or thinking, you need to really be good at getting on the other side of that and trying to figure out like what could be causing you to be wrong here, because it seems like whatever you initially think, it's going to be the opposite that ends up happening.
Yeah. So
crazy
year-to-date returns are great.
This was through the first half. I think we talked about this recently, but they're calling it the Magnificent Seven. So Apple, Microsoft, Alphabet, Amazon, Nvidia, Tesla, Meta, up 61.1% through the first half of the year.
They are carrying
the S&P 500 index again through 630, 16.9. So when you stripe out the Magnificent Seven, was up 5.8% through the first half.
Oh my gosh.
Yeah,
That's wild.
They're calling it the Magnificent Seven. Like it's like a starting lineup.
So this is funny. So putting this into context, if it was a country, if those 7 companies were a country, it'd be the 3rd largest economy in the world.
What?
Yep, just behind the US and China. It'd be bigger than Japan, Germany, India, UK. Yep.
That's wild.
That is nuts.
Yep.
So we started doing these market episodes, I feel like, in the last year or so, and we've talked a lot about the Fed and rates and inflation. Where are we at now on inflation coming off this most recent data? So educate the listeners on where are we at on this inflation problem.
It's like 3% year over year was the last reading, right? But core was a little bit different, which is what the Fed really looks at.
Yeah. So headline CPI 3.1% year over year. So that's a 1% year over year drop from last month.
Headline CPI 3% year over year.
Yep.
But core, what's the number we're trying to get to?
They're trying to get to PCE at 2%.
Okay.
So a different reading, which is like what we actually spend our money on, which came in at 3% year over year. So
we're fighting.
Core services ex housing PCE 4.2%, core CPI 4.9%. So overall good stuff, but the big ones are still taking some time to come down.
And they're still hiking. 25 basis points again?
Yeah.
Oh, so they met last week. They raised it 25 basis points, and they what is the market pricing and will happen with rates like moving forward?
Oh yeah, I think the last episode we talked about this. I can't remember what we said, but this would be interesting if we had that pulled up of what we said that was pricing in. But I think there was like no ease being priced in.
Yeah, that still looks like that. So they skip August, so they'll have 2 months of data to work off of this time, which it almost seems like they should always do that.
Yeah,
like let's give things a couple months, but whatever.
Next meeting is September, right?
September 20th. It's right now 82.5%, no change, 17.5% hike for September. So that means we'd stay at 525 to 550.
82% no change.
Yep. And then November, 30% chance of a hike. December, 27% chance of a hike. So the Fed, they were a little bit softer on that. What would you come and say? We could totally see us hiking, and we could also see
their actual quote was, we could see ourselves hiking interest rates the next meeting. We could also see ourselves not hiking interest rates. Like, why even say that? Like, what does that get anyone? You know what I mean? Some guy said it was as clear as mud. Like, what?
Yeah.
So one of the reasons we don't pay too much attention to headline is what just happened this past month. and actually in May. Energy CPI was down 16.5%. So actual deflation in energy. 16.5% was down. So
okay, so
the core PCE excludes energy.
Yep.
And housing, is it?
Energy. Let's see. I think it's just energy and housing. Yeah. Because those are volatile. Because I remember talking about this in, I think, was it April? They hit it because we had a spike back up.
Mm-hmm.
Then it just came crashing down in May, and then
I'm reading. These are some interesting points. So the Fed raised rates to the highest Fed rate in 21 years. It's kind of crazy.
And the economy's great.
Well, that's something that we need to talk about because it is wild how strong the labor market is. But in this particular meeting, the FOMC officials all voted unanimously to raise rates by 25 bips. And Powell suggests that target inflation of 2% won't be reached until at least 2025.
Really?
So that is kind of telling, like that rates coming down between now and 2025 is like very questionable.
Yeah, and I think they've said it. Just people, I think we're starting to see in the markets a little bit too, but they've been very clear in saying we don't see them coming down anytime soon. We're going to stay high for longer. But then the market doesn't believe them.
Yeah, do you think the market and people believe that?
They're maybe starting to, but they haven't to this point.
Do you believe it?
Do I believe that they're going to stay high for longer? Yeah.
Yeah.
Do you believe it, Steve?
I think so.
Yeah.
That would be really weird if because they have been very steadfast in saying that. There'd have to be some like crazy change in the data for them to.
They also said in the meeting, they noted that staff are no longer predicting a recession as their base case. So they had recession as a base case. Yeah. And they're no longer predicting that, which is wild.
I love these predictions. It's so great.
They said no recession is the base case.
Is no longer the base case.
No recession. Recession is no longer the base case.
Correct.
What's their base case now? Soft landing?
Soft landing, yeah.
Okay.
So this is something good to talk about though, is like, when we point these things out, I think we kind of come across with a tone of like skepticism. Things aren't going well necessarily, but there is something that is going well, and it's mind-blowing, and it's the labor market.
Right.
What is going on with this labor market?
As of 2 hours ago, U.S. initial jobless claims were 227,000. The estimated were 225. Previous it was 221. But like it's still like hovers around that same number, I feel like. Mark, like we track that literally weekly, but the labor market is so strong. Is this labor market propped up on stimulus checks and PPP loans? What is going on?
No, it's crazy. I try to think about it from like just the everyday business, and like it's interesting listening to clients talk and stuff about what's going on within their companies, and it seems like there's still a lot of companies expanding, like not really cutting employees. Like there's definitely more stress around that topic, right? But I haven't personally seen a lot of layoffs at all,
dude,
or people losing their jobs. And even if they did, it's not hard to go get another job. It's kind of wild.
Because I think the first thing that companies try to do, correct me if I'm wrong,
layoffs are really low.
Like they're passed through to prices. So inflation goes up, companies just raise their prices, and consumers are still like buying regardless of what the price is.
And what about wages? Like those are continuing to go up too, right? But they're slowing a little bit.
They're okay. Yeah, they kind of plateaued.
Yeah.
Well, no, they're still kind of down a little bit, but 4.7%.
I just saw something on this too.
Which is good. I mean, that's a couple months now in a row of at least being higher than headline inflation. But you know, that's the kind of the perfect scenario is we get through this without unemployment going crazy,
and wage growth
is like continues to outpace inflation, and then we could be in a growth.
You said this in one of the episodes is like wage growth has like a bunch of months to make up for that.
Yep.
Because of how low it's been compared to inflation.
It ran lower than inflation for a long time.
Yep. But it doesn't make any sense. Like I really don't understand why it's like that.
So non-farm payroll gains is like on a slow decline. But I think one of the when you're talking about the labor market still being strong, the job openings things, I just can't see it changing if these trajectories continue to go in the direction they have been going. But the labor force participation, 55 plus, has been steadily declining, 25 to 54 steadily inclining. So if you got more, at least people are quitting their jobs, it's more job openings and more young people getting into the labor force. I mean,
yeah. So if the labor market for some reason, like let's say, for lack of a better term, crashes, you guys think would that cause the Fed to pivot?
Yeah.
Or you think?
Yeah,
Definitely. Yeah. Or earnings numbers being really bad. What about? Let's talk about earnings. How
Wait, by the way, too, though, like we talk about this though, like these job numbers though, like could technically right now the job market actually be really bad. We just don't have the data for it because like we're getting call-ins. Trying to figure it out.
Well, so I think JP Morgan's doing it a little differently now. That's why they've got that.
I saw this morning in that one newsletter I was telling you guys about, ADP, which is a payroll company. They have kind of like a more like recent insight into this data, I would say, right? Because they're doing payroll. They could probably just run a report right now, and you'd have to imagine the Fed sees this stuff, right? But from ADP, let me just read this. Figures from ADP reveal private sector resilience with companies adding 324,000 jobs in July, far more than expected. Job growth was concentrated in small and mid-sized companies with up to 250 employees. Wage growth continues to decelerate in the absence of broad job losses, and a positive sign for lower inflation. Annual pay increases for job stayers and job switchers slowed to 6.2% and 10.2%. That's the slowest in 2 years. So they're like according to ADP, there's still there's a lot more jobs being added than lost, but the wage growth is declining a little bit, and that's in July. So I think what you're talking about was like what's it called? The JOLTS report is like based off of like some ridiculous, like they like call your home phone to see if you have a job or something.
Yeah.
But it seems like the labor market is still really strong. But for how much longer can it be is the question, right?
I mean, the soft landing is pretty much all. If the job market can hold up, then soft landing is good to go, right?
Mm-hmm. Mm-hmm. What do they have it forecast?
Well, and this is why we are still like cautious, right, within our investment management, because something could break still, right?
Right.
When the Fed started raising rates, and they did it so quick, right? How fast did they do all this? It was in like 10 quarters or something like that, or 11 quarters.
Yeah, it was
quick,
really quick.
So like in a 2-year period, they raised rates from 0 to 5.5. How long does it take for that quick of an increase to then actually trickle into P&Ls of businesses and stuff like that to do like how
like
long
what's
does
the
it
lag?
take? Yeah.
Yeah.
It's not like immediate.
Right.
The way I think about it too is like I saw something with the US debt, like the interest payment on that debt is going to go up significantly, right?
Mm-hmm.
That's the same for all businesses too, right?
Mm-hmm.
What business doesn't have variable rate debt?
Right.
Most businesses operate with lines of credit and things like that are variable rate debt. So like how long does it take for this? That's why we're still cautious.
Right.
But there is apparently the Fed is saying it's a high probability of a soft landing in their eyes.
I mean, this would be kind of crazy to me, but the FOMC June forecasts for unemployment rate in Q4 is to get to 4.1%. I feel like that's a lot, like a 0.5% increase. What did I say unemployment was at? Did I say 3.6? Yeah, 3.6. I feel like that's a lot, a 0.5% increase, and then by the end of 2024, 4.5%. So almost a full percent increase in unemployment rate in the next year.
Yeah.
Like that's I think pretty big change.
It's significant.
But yeah, they're targeting the headline PCE. They're making progress, but still got work to do.
So they are there is still no clue on whether or not they're like for the next meeting. Like they raised 25 basis points. What are they going to do next meeting? I guess it still just depends on the data. So like nothing significant. It still feels like it's wait and see.
Yeah,
for sure.
I think in a few weeks or when I don't know when the next CPI reports come out, but sometime before that meeting, we'll have. I feel like we'll have a good feeling around that. But and I don't know if we talked about this last time, but these readings are going to get harder and harder to show good numbers. We're in, July is going to be the next one, which there was really high headline in core CPI reports last July. Same thing in August, same thing in September, same thing in October, and it starts to kind of taper off. PCE, core services ex housing PCE, though, those readings were not that bad last July, August, September. They kind of spiked in October and they came back down. Then January, February were bad, but so that'll be interesting to see how they look when some of these bigger readings come off from last year.
What I think is interesting too is that like when they first started hiking, it was like almost every meeting, okay, they're definitely going to hike, but now the sentiment is starting to feel like, okay, changing. What are they going to do? Yeah, like you don't actually know.
Yeah.
Yeah, I don't think, man, if they go higher, that scares me.
What's going on with the housing market?
I got this up right here. I was just reading it.
I'm actually interested in this. We don't have many meetings together, but if client has a goal to buy a house like this year, what are you guys saying?
So
obviously there's a lot of
luck.
There's a lot of stuff that goes into it. Obviously their situation, everything, but like from a broad standpoint, how do you guys feel about the housing market and what you're telling clients? Because that is such a big financial goal for so many people. Like they want to buy a home, and I get that all the time.
Yeah. Well, here's some facts before we give our opinions. So average 30-year rate is at 6.93%, which is a little bit higher than it was last week. Consequently, applications for mortgages have dropped 3% week over week. And on an annual basis, applications are down 26%. High rates even have international buyers down. So the industry is slowing down in terms of sales. And that makes sense. Interest rates are significantly higher, and you still have asset prices really high.
Yeah.
Right? So I think I saw something the other day that the average mortgage or something is $1,000 a month higher today than it was 4 years ago for the same house or something like that.
Jeez.
I don't know how true that is, but you would think the market would be slowing down, but it's wild. Like there's like one home for sale in East Rochester right now. So because of that, it's still competitive. It's still really hard, and you're paying top dollar with significantly higher interest rates. My opinion on should somebody do it is really tailor made to them individually. Like if they've got a ton of cash flow surplus and it's not a risk, but if it's like one of these moves where you're just feeling like urgent to buy a house because you just really want to buy a house, but it's a little bit risky to do it, I would be.
Well, you just bought some property.
I'm in a different situation. But I think if you really need to be thinking hard about how, are you going to be okay? Because not to be a doomsdayer, but if you buy this house and you're questioning like how affordable it is, but your emotions are sort of driving the car here, and then one of the spouses loses their job if we go into a recession, then what are you going to do?
Yeah.
So if it's at all sketchy for you, I would say be patient.
What do you think, Mark? Same thing?
Yeah, I mean, there's like house prices haven't come down at all. So there's the other unknown factor that I don't know how long it takes, but a lot of people will see a spike in their property tax rates too.
Yeah.
So you go out and buy a house that is assessed for $300 right now, but they bought it for $500. Eventually, that's going to catch up on top of these higher interest rates. And there's just so many people hoping or thinking that mortgage rates are going to be back down to in the threes like next year.
Which will not happen.
I don't think.
You know what I was thinking about the other day? So who when you think of home buyers, who do you think of? Like who are typically the buyers that you think of? Who are most of the buyers today?
I would say younger families.
Right?
Broke people.
Right. So think about this. That young family is paying top dollar, the highest interest rates on mortgages in 30 years. And then you throw in expenses like daycare, which is just crazy. And then they probably still have student loans that are about to
How
kick
can
in.
you afford it?
So you think about all these factors coming that are happening all at one time.
Yeah.
It's a very difficult time to be a young family from a financial perspective.
It says Goldman Sachs Global Investment Research rental affordability is superior to mortgage affordability at present.
Wow.
So buy rental properties?
I think it's saying it's cheaper to rent than to buy.
Yeah.
Right.
Which
some people are going to buy.
Is crazy.
Rent more than buy.
That's great news, but there's nothing available to rent either. So
No, yeah. No, you really can't go anywhere.
We need to build more homes, you think?
I want to see a chart on here that shows the percentage of people that are just moving back home or staying home.
With mom and dad?
Yeah.
Guys, I got a couple of cool headlines here that I want to get your opinions on, because I think we should wrap up a little bit, because we talked about the main stuff: inflation, job market, the Fed. Is there anything else you guys wanted to add on that stuff?
The only thing I was going to bring up was the downgrade thing, but maybe you're about to.
No, I'm not. But we can talk about that. That was a little yesterday, wasn't it?
Sometime in the last 2 days, I think.
It's all over Twitter land. Which, by the way, we should talk about that. What's going on with Twitter? X.
So, real quick, let's just talk about this, and then we'll get to your headlines there. So, America was downgraded by Fitch. For people who don't know this, there's independent rating agencies. Fitch is one of them. Standard & Poor's, Fitch, and Moody, I think it is. And their job is to rate the financial strength of businesses and whatever. And Fitch apparently downgraded the U.S. from AAA to AA plus or whatever, which is still a very significantly strong rating, obviously. But what do we make of that?
Doesn't matter. I mean, they went from the highest possible rating to the second highest possible rating. Still pretty much guaranteed to be able to pay their obligations.
Yeah, you imagine you get scared that the U.S. isn't going to be able to make payments on their debt. We got a lot more. Oh yeah, aliens are real now, so that actually.
We're talking about that next.
What is that?
Here's the quotes. Here's a couple quotes for you from people who know a thing or two about this stuff. Jamie Dimon. We're trying to get Jamie Dimon on the pod.
Get him on the pod.
He couldn't come on the pod today, but
You got to tag him in every single podcast.
Jamie Dimon on the pod.
CEO of JP Morgan, Jamie Dimon, thinks Fitch's U.S. downgrade is, quote, ridiculous. Warren Buffett, ever heard of him? His quote, there are some things people shouldn't worry about. This is one. So before you lose your mind thinking that this is the end of the U.S. economy or whatever, relax. It's another one of these things like the debt ceiling where people it's good headlines, but it's really
great headlines.
Because we're not going to do this right now, but if you go and look at what does this actually do to the financial system, like what does it change? What does it change about the U.S. budget or fiscal policies or any corporations, or what does it change? Nothing. So it's like literally a non-thing. They're pointing to long-term deterioration or whatever, which I'm not saying there isn't issues. There are issues. But in terms of pull all my money out of investments and go to cash right now, that would be...
It gets clicks.
Not intelligent. Mm-hmm. All right. What are your...
By the way, you guys hear that? Mm-hmm. That's my laptop.
Oh.
Listen to this. Okay, so I'm going to quiz you guys what you guys think this is. I'm just pulling up some big Twitter headlines from last month. Actually, this was more recent, but this is interesting. This is per CNBC. High net worth investors with more than $1 million have their highest allocation in what asset class, you think?
Equities.
Real estate.
Final answers?
Yeah.
Cash.
Ooh.
Wrong.
What do you think? Mark said equity.
All right. What do you got next?
Anything say? Oh, we're done. Okay. All right. Next one.
I have no comment on that. I guess actually I do. It kind of makes some sense.
Wait,
you can
hold
get
on.
paid
Say the
so much
question
to
again?
get cash right now.
I said so. High net worth investors with more than $1 million have their highest allocation into.
How is real estate not that answer? I was thinking in the market, but
It's cash.
Real estate
Is real estate on there? Does it show anything?
No, there's no chart. This is just a quote.
Isn't real
Who's the
estate
quote
like
from?
this?
Unusual whales.
Okay, so it's probably true.
It's legit, yeah.
So it makes sense though because you can be in a money market getting paid 5% right now, taking
Right.
no risk.
I'm just
I
thinking.
actually think that's kind of
$1 million
more bullish.
net worth. Like your largest asset usually is probably going to be your real estate at $1 million bucks.
It probably
But
is. It's probably like
the more
not
you go
factoring that
up,
in.
like if that's at $10 million,
Right.
that's maybe a different story.
Yeah.
But
But I kind of think that's bullish. That means there's a lot of money still to be
to go
deployed.
to buy, yeah. Yep.
Anyway.
Oh, yeah, so the amount of money that's in, I don't know the numbers, but there's a massive amount in money market funds.
Which, when that gets deployed to equities,
Right.
boom,
If
skyrocket.
it gets deployed to equities, might get deployed to bonds.
That's true.
Yeah.
This one was kind of more of a meme, and maybe you guys didn't see this, but like a lot of people were commenting on this that I don't know if you guys really would comment on this, but how Taylor Swift is propping up the economy.
I did see that.
Have you seen that, Mark?
No. What happened?
like
Because she's on tour right now.
Oh,
like she's literally going to cities and like the sales and
Are like, but the
it's like-
numbers are actually
it's
kind of
insane.
nuts.
Yeah, it's insane. I don't get it because I've never been a Swifter, but
It's
is.
never been a Swifter, but she's helping the economy, dude.
yeah, good job.
With all the Swifties out there,
Good job.
dude. I actually kind of like that. Let's do more headlines like that.
That's all you
Like the big ones. No, that was the only like two interesting ones I thought we'd wrap up with. Why, do you guys have anything,
Nope.
Marky?
do I have any headlines?
Anything on your mind?
No, I don't think so. If anything comes up before then, I'll. Or are we done?
No,
right
we're
now? Oh,
wrapping
done
up.
right now.
Yeah.
I got nothing.
Nothing.
I got nothing.
All right, so quick recap.
Yeah. Fed meeting just happened last week. They raised 25 basis points. It seems as though they are very data dependent right now, more than ever. Depending on what's going on and what they see, it could literally, like, they probably actually don't know what they're going to do. Like, they're not even just saying that. They probably don't know.
Which I'm somewhat okay with.
Me
that.
too.
I think we're at the point now where I think they've always said they were data dependent, but they were working off of really bad data apparently.
Right.
Because they're still increasing rates.
Mm-hmm.
Should be done by now, but yeah, I mean, I think that they can truly be, and we are going to have 2 months of data this time. So hopefully they've got something accurate to work off of.
Yep. So, and the inflation data is looking better. Job market is still really strong. There really hasn't been like that much of a
The
change.
stock market is putting up Hall of Fame returns this year.
Hall of Fame numbers. This is a banner year.
I do think it's important for everyone to know that stocks are expensive compared to historical norms. Every asset class is expensive right now, besides international stocks. And bonds are cheap.
Really?
When you say that, you're referring to
P ratio?
The price to earnings ratios. So for a while now, it was really just large growth and some of the mid and small growth areas were kind of crazy expensive. But now it's back to the point where everything's above historical averages besides small cap value stocks.
What's that at? The time to buy?
Just below 94% of long-term average. Everything's over 100 besides that.
There are some interesting. We can't go down this rabbit hole right now, but there are some very interesting innovation headwinds happening a little bit with like AI. And did you guys see this LK99 stuff?
Huh?
Whatever. The superconductor. Would like transform
Superconductor?
so many industries. Oh yeah, we can't talk about it right now, but there's some crazy innovation happening right now that could be driving some of this stuff. But anywho,
I mean, like NASDAQ at 40%, definitely. Crazy.
This is kind of interesting. Since the March 2020 low, small cap value is the best performing asset class, but it's still the cheapest performing cheapest asset class.
How?
It's kind of weird.
must have got really beat up.
Yeah, you don't feel good about small cap right now, though.
Not yet. Not there yet.
Perma-bear.
You listen to Mark in those meetings.
This is your fault. You were a perma-bear since like 2019.
I made too many bad calls, so I'm just done trying to do it. Warren Buffett, ever heard of him?
All right, we gotta go.
All right. All good?
Good.
All right, thank you for listening and watching the Max Your Dash podcast. We will catch you guys in the next one.
Securities offered through Securities America Inc., member FINRA SIPC. Advisory services offered through Security America Advisors Inc. Dash Capital Advisors and Securities America are separate entities.